AMC is down 18% today. Is this a tactic by the hedge funds to push the prices of AMC lower? Does retail have the strength to hold these share prices up? And is this why we saw a dip this morning? And will AMC go back up? We will answer these questions today. Just this morning, AMC made an announcement that you will file an 8K to sell 11.55 million shares at the market equity offering, raising about $500 million in addition to equity capital. This comes as no surprise, as the CEO of AMC earlier this week announced that the company will be very aggressive with their growth strategy. In the article earlier says, "We have raised funds that will allow us to be aggressive in going after the most valuable theater assets." Now, while the 11.5 million shares added to free float to raise equity is great for the AMC company, it ultimately hurts the retail investors who are looking to squeeze shorts. This is because as more shares are added to the free float, the value of each share diminishes. And not to mention, when a company sells its shares, you'll also trigger certain retail investors to sell their shares also. So there's a bit of a domino effect happening here. And not to mention, this is not a small sell-off. This is quite a big sell-off. This is to the tune of $500 million, which is a lot of money. AMC has actually given us a warning. So AMC warns investors they could lose everything. We believe that the recent volatility in our current market prices reflect market and trading dynamics unrelated to our underlying business or macro industry fundamentals, and we do not know how long these dynamics will last. Under the circumstances, we caution you against investing in our Class A common stock unless you're prepared to incur the risk of losing all or substantial portion of your investment. I would just like to mention that this is quite considerate of AMC. It's not usually something that is also accompanied with a sell-off. And B, this is sort of a warning against the domino effect I just described. So when a company sells a lot of shares, there's just more shares in the particular market available. And the value of each share diminishes because there's just more. So if there is more of everything, then the value of each is less than what it was before. And normally investors don't like this news very much and tend to sell off more shares, creating the domino effect. So there was a potential risk today that AMC could have gone a lot lower, but a lot of other investors were still looking to buy into AMC, which kept the prices from going lower than it could have, because it could have been a lot worse today than what we actually saw. This is a tweet by OKEx, and this was released in the pre-market. Right now, it's an estimated short interest of 18.39% of free float, with 19.7 million shares shorted. So again, we have a slight increase in short interest, and it also tells us the shorts haven't covered, which is actually good news for us. In an article here by Reuters, short sellers mostly held the ground as AMC shares soared. Bearish investors betting that AMC would decline held onto their bets for the most part on Wednesday, even as the stock rose as much as 127%, according to the latest data. And I think that's a bit silly. So the shorts have to cover at some point. They have to exit out of their positions. And it seems like they're holding strong. They're holding their ground. They're not willing to sell. They're not willing to cover. So the people in the short position will eventually have to cover at some point to either take profit, make a loss, or either break even. And at the moment, they're not cornered into a position where they're scared that the prices for AMC won't go down any lower. So they've raised the stakes, and we are now battling with the short sellers to put them in a position whereby they're willing to sell the stock. And when they cover, and that's when we commence the short squeeze, driving the prices for AMC a lot higher than it is now. Finally, the best for last, this is a feels good article. Jefferies blocked short sales in GameStop, AMC, and Microvision. Until further notice, Jefferies Prime Brokerage will no longer offer custody or naked options in GME, AMC, and MVIS, the memo noted. The firm will no longer allow the execution of short sales of those securities, the memo continued, noting that other stocks may be added to that list. And this is very good because the brokers are beginning to ban shorts to mitigate risk because they can see that a squeeze is seriously on the table now. And I believe there's been rumors going around that Raymond James has also banned the shorting of AMC. So not just a single broker, multiple brokers are banning the shorts of AMC. So potentially if more brokers are stepping up to ban shorts, that will seriously put a dent in the people who want to short the stock, as they're no longer able to do so. So let's go over to the charts today and have a look at what happened today. So there was a sharp dump at the open over here. And was this caused by the new shorts? Well, it's quite unlikely. It is more likely by the news of the equity raising attempts, the AK filing. The retail support came in strong to hold the prices up despite the institutional selling, which causes the bounce here. And as we go on through the day, we can see that buying pressure was actually strong enough to push prices back up towards $70. And towards the close, we saw another round of intense selling pressure. As expected, this is an attempt by the hedge funds to try and slow momentum before the end of the day. As we went on throughout the day, buying pressure was actually strong enough to push prices back up towards $70. Towards the close, we saw another round of pretty intense selling pressure. As expected, this is an attempt by the hedge funds to try and slow momentum before the end of the day. Potentially, it could very well be. The hedge funds would want to drive the prices lower so that you can't recover to the all-time highs for a short squeeze. So they want to put the prices while the retail investors cannot buy the stock to as low as possible. So the journey to squeeze is more difficult than when the market opens. And I think also this is why the case for AMC is such a significant one. Throughout most of Wall Street, the institutions have always bullied the retail investors out of their positions and have always basically taken their money. And I think it's important that we have to rally together as retail investors to really stand a chance against these big institutions. But going forward with the technical analysis, important levels that we can recall from this session include a strong intraday support between $37 and $42. Let me just mark those. With some overhead resistance to be expected if we make another move back towards the $70 to $75 mark. So roughly these two levels. And lastly, looking at the volume profile, it shows us that the price will likely struggle to move freely between the $48 to $58 mark at this current stage. So that roughly wraps up the technical analysis. What we want to see before the market open tomorrow is the price for the stock to be above 58, maybe even better above $60, because at this particular price, you will position ourselves better for a impending short squeeze. And tomorrow is an important one also because currently a few brokers have banned shorting AMC. And with restricted short selling, we can potentially see AMC move with greater volatility and stronger momentum to the upside. But as we can see, the AMC saga is far from over. There is a lot to happen, and there is a lot that will happen in the next coming day. So stay tuned.